to the session this evening. Um, Hope you're well. Hope your Thursday's been a good one. And thank you for popping in today. Just let me know you can hear and see me okay. That would be fantastic if you get a chance to do that. Today we're just going to do a little physical market update. Really talking about four key things that are going to drive markets. We're going to have a look at some charts. We're going to have a look at, we're going to have a talk about some things going on over the next few days that might move markets. And of course, what we shall do is um, tell you what's coming up that you can avail yourselves of if you choose to. So, thank you. Thank you very much for being part of this. Just a little reminder that this is for educational purposes only. Please make sure you do your own due diligence on anything you see or hear. Make sure that you follow trading plans and have criteria for entry and exit, managing risk at both points, consistent with your own personal trading objectives and financial situation. So, that important message being said, thank you very much for. Just going to stop that recording. There we go. So, what we'll do is, as I said, we're just going to have a look at four key things I think are going to be worth keeping an eye on over the next little while. So, first thing, of course, is to say that markets are still trading at or near all-time highs. And despite everything that the market chucks at things, we've had data that's been questionable. We've had the Fed. We had Jerome Powell last week at the Jackson Hole Symposium, suggesting or telegraphing or essentially confirming that the Fed are likely to cut rates on. Let's get the latest figure for you. Um, just waiting for it to pop up. So there's an 87.2% chance that they're going to cut rates when they meet on the 17th of September. The expectation is that there'll be another potential rate cut before the end of the year, to the tune of around about another 0.25%. I think that's what the market is pricing in right now. That's not going to keep Trump very happy, but is nevertheless unimportant. Um, just see if I can pull this up at all now. There we go. So you should see on your screen now. There's the CME group for December. Let me just flick it back to. So this is what we're expecting for September. So the current rate is 425 to 450. So we're expecting a 0.25% cut to the tune of 87%. So as I said, we are expecting, if we look to December, we're sort of expecting that potentially to be at least another rate cut, possibly by another 0.25% again, possibly by even another a full 0.5%. So a 0.7% drop is telegraphed into what markets are pricing in right now. That's really quite important. Since I'm on the internet, we've got it. Let's just have a look at how Europe's opened. Interesting. We'll have a look at Tesla in a moment. But they see that they see if we look here that it's a pretty flat session in Europe. CAC wants to outperform with about just shy of a 0.5% to the upside. FTSE's down about the same degree. Yeah, Tesla sales plunged 40% in Europe. I'm interested to see what that does to Tesla's price. Let's looking at the futures. The futures are actually slightly better than they were. We had Nvidia reporting last night, which I'm going to talk about in a moment. I'm sort of reluctant to come off this because it's a bit variable in terms of this streaming software's ability to look at the internet. So the fact that we've got it up means we might take full advantage of it. You can see there the Russell is the outperformer. If you look at Nvidia's earnings, So Nvidia beat both on the EPS expectation, which is actually better than it was earlier, beat both on EPS and on revenue. But there was concerns about their networking centers didn't quite do the revenue that was thought they might. And so it was in after hours trading down around about 3%, but that's a really nice bounce. You can see that drop. There you go. There's that drop when those results are announced. And you can see down to 174, and it's recovered just some degrees since then. And now we're in pre-market. We're less than 2% to the downside, and that's why we're seeing these Nasdaq futures look better than they were. They're down about 0.3% in trading uh, in futures trading in Asia today. So that's good. We can see weakness in oil. We can see gold is holding on. Excuse me. Copper's pretty neutral. You can see the weakness in the USD. Yen's been quite strong today. Bitcoin showing some buying again. We'll have a look at all of those in a moment. Let's just touch on the data as we pass through. Really big data day today. We've got preliminary GDP, which is probably the most important GDP. We've got three GDP numbers come out. We've got prelim, advanced, and final. This prelim number is the one that usually creates the most surprise. We are expecting a slight tick up. Markets are like that. We are expecting a slight tick down in weekly employment, and we've got some data as well, which is expected to be slightly better as well. If those all come to pass, that won't be a bad day at the office for markets, and it may retest record highs. We'll have a look at that in a moment. Now, tomorrow is important because tomorrow is the PCE data. Excuse me, this core PCE price index is really important. The Fed's favorite inflation measure. We're running a session on that tomorrow. It's going to be a joint go to webinar YouTube stream. So if you haven't got if you haven't got an invite for that, then let me know. Just drop me an email. I don't think there's anything else I want to have a look at while I'm here. Um, and let's just check on the RBA rate tracker as well. Obviously, they cut rates. If we look at the next time they meet, we are expecting that there'll be no change after the recent 0.25% drop. That sort of fits with what we're saying in the press conference. Possibly a pause for not only next time they meet, but the time after that. But there is an expectation that we'll get another 0.25%. So that's what central banks are sort of doing. But that PCE data tomorrow is really, really important in terms of what might happen next to markets. If we look at if we look at how the indices are tracking at the moment, there's the Nasdaq. You can see small gains across the board. Big tech sort of doing okay, with the exception of Facebook. Let's flick to some charts in general. I'm just going to take me off there. Just give me a second. There we go. There we go. And you can see I've just been doing a back test for another session. So close that down. Okay, so if we look at the daily chart, you can see the Nasdaq pulled back a little more than the other indices, but really this week has been relatively positive. Thursday, Wednesday, Tuesday, Monday. So Friday was a good day. Remember, we had that bounce on Friday after the Jackson Hole symposium speech by Jerome Powell. Since then, it hasn't moved very much. We're sort of seeing that on other indices as well. So if we just sort of look here at the US 500. You can see there the futures have actually pushed higher, as I talked about there. Uh, Really quite choppy today. Just pulled back a little bit over the last. Looked as though it was going to go significantly high, but we've just pulled back again from a test of yesterday's highs at this level here, around about that sort of 64.89 level. Watch today's high now for this, but it looked as though I suspect we might be in a range now until that data comes out on this. The US dollar is looking a little shaky again. You can see that downside movement again. But this is when we did a live update this morning, I talked about this to some degree, and that we're seeing a lot of assets in this sideways range while we wait for some more information to come into markets. The US dollar is no exception. Um, and gold is likewise. Now, gold is interesting because we're sitting underneath this really important level on this futures contract of just around 3,400. If we breach that, you can see how important this is. The last time we were here was around about the 8th of August, so around about 3 weeks ago, ish. And so we're looking, if we breach 3,400, we could be back up to test those record highs, which are really, really stubborn at 3,430 on the CFD contract that Go runs. So keep an eye on this. This could be a high probability trade. We've had one test over that, but it didn't hold. Um, Somewhat interestingly, pop out again. It looked like a compelling candle, but it's pulled back from that in the last sort of hour or so. But you see, it got sort of stuck. If we look at the high close, it was 3,400, almost dead on. So give yourself maybe half an 80 out over 3,400. Maybe a breach of the high there at 3,402, I think it was. Let me just check what the high was on the candle. Yeah, 3,401.12. So maybe the high on the candle here, yeah, around the same. So I would say 3,402 suggests a breach and possibly a gold trade. And his copper rejection of a move out of this range here. I know you can see it's trading. This is that. It's been pretty quiet on the trade news front over the last few days, but there was that tariff-induced drop on after the 50% on import tariffs on copper into the US came into effect the 1st of August. And since then, we've just green shoots of recovery, but over the last sort of week and a half or so, we're just sort of stuck in between there. Oil is looking, as I said, looking a little shy today generally, but again, quite bouncy in between two key points. 64.65 to the upside, 64.20 to the downside. So a breach either way of these could be worth looking at. But again, we may get some movement once that data comes out. If that GDP number comes in strong, we could see oil push higher than that. And I think then there's a trade on. I think this is worth watching. Maybe $1.50 in this up to around about 65, late 65s. Put it on the you just put it on the daily chart there. So I wouldn't be surprised to see it retest 66 if we do get some good data in there. But at this stage, again, it's mid-range. So difficult at this stage to call. So these major asset classes, gold is the one I've been watching most of all. I think for a breach of that level. Let's just quickly check out Bitcoin as well. On the daily chart, you can see we breached this key level at 112,000. We've been talking around for some time. Sort of double top type of formation there. But it seems to be supported around about 109. We've got a bounce. And the important thing is we've moved back over 112,000. So it looks as though the buys are most certainly back in. This was looking a little shy earlier in the day on this drop, but once it breached 112,000, you can see the buyers came in at that point. You can see volumes just dropped off, which sort of ties in with this lack of desire to go even higher. So again, just keep on an eye on today's high. Put it on a 4-hour chart. You can see there's potential upside to around about 114.5, maybe even 115 if we get some buying coming in. So that's where we're at with all of this in a moment. We'll come back to some charts in a moment. Just want to pop back to the presentation just to make sure I'm not missing anything. But as I said, most asset classes are in pause mode at the moment, and I think that's pre-data. So we've got that. Remember, we've got that big GDP, we've got weekly jobs today, and most importantly, the PCE number tomorrow. So that's possibly why, with that big data pending. Now, in terms of Nvidia, let's just have a look at where Nvidia sits. If we go back to the if we go back to the charts in a second, they were my four market drivers for right now. Trade will still be really important. Anything that comes out on the trade front, and as I said, it's been quite quiet of late. Other things seem to have been occupying Trump's mind of late. Um, but certainly those are here to be the four for right now. There'll be other things coming into play after that big data over the weekend. I think we may focus back on some trade issues as from next week. Um, let's pop back to some charts. I really want to have a look at the Nvidia chart. So let's put that on right now. We should get some pre-market, really nice move on A2 mil, by the way. Let's just do that there. So let's just have a look. Sending the other way. So if we look at Nvidia first of all, so you can see here we had that big drop after earnings, and there's the post. There, if you like, is the aftermarket action, extended hours trading on the CFD. But you can see since then we've had that gap up, almost regained about half of those initial losses. So just keep your eye on this. Um, if you pop up on the daily chart for context, I just think Nvidia is just such a strong company. Logically, it would make sense technically to wait. I've talked about this being a $200 stock, but logically, I would be looking for a move over 182. I still see this as $200 worth. Still an AI leader. That those results were great. I think the markets were just looking for a reason just to drop off, and I think the buyers will come back in as soon as it opens. Whether there's enough momentum tonight to take it over 182 might be dependent on that data again. Obviously, anything that sort of suggests that the economy is in a reasonable place, and particularly the PCE data tomorrow, if that comes in soft, I think we'll see Nvidia breach 182. So keep that on your radar for the next couple of days. I think it's probably the way to go, if that makes sense. Um, G'day, Rick. Good to see you here, mate, and thanks, Wayne, as well. Um, so that's where I think Nvidia is at. Um, let's just have a look at a couple of the FX crosses while we're in charts as well. I think it's probably a good thing to do. Let's have a look at the Euro USD. We suggested weakness in the USD, and you can see an important breach on the Euro. I talked about this again at live update this morning. But you can see the breach of that 116.56 or so on the hourly chart. This looks compelling and not a great move up. I think this is the higher probability trade if it breaches 116.72 with a potential move up to 117, around about 28 to 30 pips possibly. So just keep an eye on this. But for a short term scalp, this looks good. But I just think it might get stuck here prior to that data. So again, this could be one to keep an eye on post data. If we look at the US yen, this is one we've been watching all day, really. You can see the test of 147, which corresponds to what was happening here on the 26th. And if we go back even further, back back here also, and even back as far as the 20th, this looks like an important level. If it breaches 147, could again be a 30 pip move to the downside. So we're really sort of not having those massive, compelling potential moves right yet. But as I said, that data could change everything. That's out in 2 hours' time. So if you are still up and around about and ready to rock and roll, 2 hours and 5 minutes is when that GDP data comes out and the weekly jobs. My chart of the day this morning was the GB pound Aussie, and this has done really well. Done exactly what we thought it might. So if you were on here and you took advantage of this, well done. Uh, so we suggested that this was the level to watch at 207. We did also think that maybe 207, sorry, 207.25 We did also suggest that it might get down to test 207 dead, and that's exactly what it did. If we look at the low of this candle, the low was 207 on the button. We suggested that might be a good place to move a trail down. So let's say you had a stop at this point here. Let's just make that red. There we go. So now would be the time, puts that to a break-even point of view, at least. Now, this is key. If we've reached this 206.90, 96, then I think 206.65 is on the cards. This is the next blue line. Why do I think that? Well, if we look at the 4 hourly chart, you'll see quite a lot of price action here. Um, I think this is going to be a really strong support that's going to find difficulty in breaching through. Because it's a nice round number 207, it could be done here. I wouldn't even blame you if you took off this now. If you entered at this 30-minute chart, so if you entered at this point here on the breach of that 107.25, you could be forgiven. It's a reasonable assumption. We've potentially got a 5-week reversal going on here. You rip it off and then have a pending order sitting here around about 206.90 would be a way to play this. And then again, look for that short-term cool down here. Bank your profits so far. It could make its way all the way back up here, back to the potential entry point at around about 207.22. So interesting one that's come to pass in terms of what we thought might happen. Um, is it now the time to sort of think, right, let's rip it and let's wait for the next confirmation that it's continuing on its way down this stage? The other one we had a look at this morning was the Aussie Hong Kong dollar, and that's still going very, very, very well. This was where we had a look at it today. We did have the pullback initially, but now is rocking and rolling. It's now over 508.80. Um, on the 4 hourly chart, we put a potential target of around about, um, from memory, around about this level here. So it's almost, so 509.57. Um, so it's halfway up from that. That was our level of interest at 507.75. So again, um, we've got a 100 pip move up in that. So that's really positive. Um, is that where you take it off? Again, what you would be doing at this stage is slipping down to a 15-minute chart and then sort of using the last, if you lost the last swing low, which is that level there, as your new trail, and just continue doing that every time there's a retracement. Even as you get closer to that data, perhaps even pop to a 5-minute chart and do the same thing. But whichever way you slice it, you should be trading this fairly aggressively at this stage, if not taking profit, maybe half profit off the table, leaving the rest to rock and roll. That would be. So those are our two charts of the range. Why is those lunchtime sessions are worth doing? Because sometimes we get a sight of something that may be trying to set up, and as you see there, it actually worked quite well indeed. Okay, so in terms of for right now, then I'm not sure I will be entering any FX trades right now in light of that data. In fact, entering anything prior to that big data may be a little tricky. But certainly the Aussie Hong Kong dollar looks as though it's got further to run. 508.75 up to 509.53. So that's around 70 pips potentially. Just be careful. There's around about a 4 5 pips spread on this pair. Just check out the Aussie USD actually. I'm going to make the Aussie USD much sharper right now. Be interesting to see how much more this gets. Let's pop it on the daily chart. Okay, so let's line chart it for a second just to get a bit of clarity. Yeah. So we've got a couple of levels. There's the long-term level at 65.82. So that's around about um, 56-ish on the daily chart. So about one and a half, yeah, about an ATR. There may be a pause point at this. I'm just going to put a little line there, going like this, going like this, going like this. Do and make that a different color so we can see it on the shorter time frame. Put it back on candles. Let's put it on the shorter time frame. There we go. Okay, so we've got a breach here now. We've got a potential move up from 65.26 where it's at now. So we had that breach there at 65.20 with the potential 20 pip move to the upside. Possibly a little late on that. Nevertheless, I think this is a nice scalp if you wanna be here. Maybe do it on the 30-minute chart. I think that makes more sense actually. Maybe even a 15-minute chart. Yeah, you could enter that, take that, rip it off. Thank you very much, and just trail the stop quite aggressively at this stage. You're probably putting the stop. I'll probably be putting a stop around about 65.17, 65.15, somewhere around that level. Um, maybe even. No, that's probably too tight. So, I mean, here's what it. Okay, so let's say you did that. Let's say you put the stop here. Although that pippage doesn't seem very much, if indeed pippage is a word. Let's say we had our stop here. So from as it continues to go up as we're watching it. Um, okay, so that's 10 pips. Okay, upside potential on this around about 13, 14 pips. Okay, so that's a risk reward of 1 to 1.4. Um, so it's not bad. It's not bad. So 1 to 1.5 essentially. Um, so it's better than 1 to 1 if it does make its way all the way up to 65.41. But you'd be quite aggressive with that trail. So maybe at the end of this candle, you would sort of take it up to there, perhaps. But it does look interesting. But it is going to be like this until that data comes in. You're not looking for any big moves until after that data comes in. Oh, let's sort of see buying again. As I said with gold, let's just take that off. Take that horizontal line off. Sorry, the vertical line off. Okay, so there was the fake out. So we're looking for a close really above 3,400. Let's say 3,401. So at this stage we're at sort of 3,398. So again, you've got some nice lines in the sand. Again, you'd sort of want to be over this for the next couple of hours. Maybe trade it again, trade it on a shorter time frame, and don't be shy taking it off. Make sure you have a stop in place prior to that data coming out. Good numbers should be, I think, will be bearish for USD, so potentially bullish for gold, is what I'm thinking. Okay, if there's any charts you want me to have a look at, then put them in the box, in the question box, and I'll try and catch up with them. I know there's a little delay in terms of when I'll see them, but just put them in anyway. Just a couple of ASX stocks to keep an eye. Oh, sorry, one more US stock to keep an eye on for today. Really like Carnival. We had a breach of this key level at 31 a couple of sessions ago. Further buying yesterday. This is looks as though it's going significantly up. It's high since pandemic. Um, so potentially up to $40 in the medium term. Perhaps take profit. I'll take half off around about 35.5 to 36. But this is a very strong chart from a Carnival point of view. Um, that was the other US stock that I wanted to have a look at today. On the ASX, Zipco looked great over the last few days. Really nice bounce on an earnings. That's done really well since entry. Um, so that's up around 25% already. I think this is the potential to go even higher. Um, this on a monthly chart. This is a key level it's at now, and a potential move up to around about 527. I just like this stock a lot. I think it's great. Um, BVS were another one that we were tracking. That unfortunately pulled back, but recovered a little bit today. A2 Milk just continues to go from strength to strength. Another one that we called, as you can see, a little while ago, which is doing. We entered it on this candle here after a breach, and that's gone up around about 10% since then, just in the last week and a half. That I think is again looking. Let's just pop it on the weekly chart just to get a bit more detail on this. So this is again, it's a good. That could be the top on this, around about $10. So this is almost right for profit taking. But if it does, keep this on your radar. If it does reach $10, it means something else is happening, and maybe worth a nudge. And 360 ASX we talked about already. That's sort of doing okay as well. So one more in terms of what's happening with the ASX. IEL I talked about today. When we talked about it this morning, this was on the back of some corporate results. It never pushed through. I'm keeping an eye on this for a potential move on that. Up 28% today. It's a stock that's been fairly well battered over the last little while, but you can see that big bump. If you look at a daily chart, essentially this is in gap filling territory. If it reaches 615, then it'd be up to around about 736. We were watching this and waiting for it to breach. So no entry on this, unfortunately. 503. We're waiting for it to breach this to try and close that gap. But of course, that earnings came out and shot it up straight away. Qantas looked really interesting today. Very similar story. Good earnings, pulled back from their high. And Worley is another one that we think is sort of interesting going forward. Um, Again, earnings season bounced, but don't like this much unless it breaches 15 or so. Excuse me. Um, so, I don't know, Euro Yen, Euro USD still popping up, doing quite well. And of course, we'll check on our Aussie USD as well. That just seems to be pausing a little bit at this stage. As I said, it's going to be difficult. So at this stage, you'd possibly be thinking, right, let's just chop that up to there to take it up to break even at this stage. Although it's relatively close, we don't care. We know what this market can do when that data gets closer and closer. So maybe just being cautious with the positions that you've got open is prudent. So what do we keep an eye on just over the next few days? Yeah, still getting over this Melbourne virus, which I caught when I was over there. Uh, um, so we'll keep an eye on the key data out tonight in about 2 hours' time, less than 2 hours' time now, on the preliminary GDP and the weekly jobs. So looking for good numbers in both to keep the momentum going. We're looking for what's going to happen with Nvidia after opening. We'll keep an eye on gold as well, just to make sure that that's doing well. But remember, PCE data tomorrow, that's going to be critical. Access that via YouTube tomorrow on a stream, 10:20 p.m. Eastern Time, for those of you who would like to join us. Also on GoToWebinar. So put me a little line. Let me know if you want to register for that. I'm just going to have a quick check. Be awesome if you just clicked a like on your way out if it's been useful and interesting and all that sort of stuff. Um, and I will love and leave you. I'll see some of you tomorrow night. Thank you very much for popping in today. I hope that you enjoy the rest of your evening. We'll see you again very, very soon. Take care. Have a good night. Bye bye for now.